The other policy we've got to talk about is this one-off levy on accumulated earnings abroad. For the FX market earlier this year, there used to be a big discussion about what this would mean for the dollar. Yep. Have you guys been looking at it? What does it ultimately mean, and what's the size of the repatriation story going to be?
Yeah, I think with the convergence trade having taken over for the last 3 months, people kind of put their acronyms of BAT and HIA reform on the back seat.
Yeah.
So I think it's becoming an issue again in FX markets. They're looking at it a little bit more, but again, there's not a lot of details about repatriation. There's not a lot of details about what's going to happen within the corporate tax reform. So I think it's an issue, but what I think's happened is that markets have really kind of forgotten about it. And now the expectations around Fed policy, the expectations around fiscal stimulus, the expectations around just Washington in general, the marginal news flow has improved there. So I think the dollar's coming from a very depressed level. Markets have been very short the U.S. dollar based on the proxies we have for positioning, some of the short-term valuation models we use. But overall, I think this story is really about kind of changing the positioning. It's more about a pause in what we think is a major theme, which is the convergence trade with the rest of the world, the rest of the G10 currencies catching up with the United States, as opposed to a U.S.-specific driven U.S. dollar market.
Is repatriation an FX story, though? Because where we do have clarity is where some of that cash is. Some of that cash is already denominated in dollars, and it's in the corporate market, corporate credit market, because these companies have been buying corporate debt. Denominated in dollars as well, if you talk to some of the CEOs. So I just wonder, is it going to have any effect at all?
It has a marginal effect. So we have one kind of case study go back in history. We're talking about maybe hundreds of billions of dollars. Over a long time period, if you think about the FX spot market, this is a $3 trillion a day spot market. So the kind of flows you get coming on the FX side from repatriation are not really that big. I think it does provide a cyclical tailwind. If this is coming at the exact same time that you're getting a little bit of recalibration in the Fed, U.S. data looks a little bit better, it adds to a change in sentiment on a very short-term basis. But this isn't something that would drive the U.S. dollar over a longer-term cycle, especially since if you look at the other side of what could happen on tax reform, is you could see a larger twin deficit. So the current account, the budget balance start to go up, start to increase a little bit. And that on the margins is much more powerful and longer term for the U.S. dollar. And it's much more negative than the one-off repatriation of a couple $1 billion in flows.